UPBOptionMillionaires.com. It's a Tuesday, May 17, 2016, 35 minutes before the opening bell. S&P 500 futures pulling back before the bell. Well, that opening bell yesterday elicited a massive buying frenzy. Somebody woke up Monday morning, or maybe talking about it all weekend. We got to buy stocks here. Got to. Because on Friday, we had a nasty pullback. Things looked rather ominous into the close. Yeah, see this candle? But that was reversed, and then some yesterday. We recovered all of Friday's losses and rallied even further. How great is that? Although we did pull back late in the trading session, but those highs were met again overnight. Well, we're pulling back here. Economic data out this morning. Hints of inflation. Oh my goodness, could it be? So we're seeing a bit of a pullback. Longer-term chart perspective for S&P 500 futures. Are we starting to roll over here? I was looking here, possible head and shoulders topping pattern. Yesterday's action certainly not confirming that. But again, the neckline rests here just over 2040 on S&P 500 futures, and I talked about it this morning on the blog at OptionMillionaires.com. Each of the last pullbacks that we've seen of the almost crash variety that we saw in August, and then the worst start to a year since the dinosaurs walked the earth, started at about the 2075 level for S&P 500 futures, and look where we came up here to start May. So if you look, possible pullback, the likes that we saw to start 2016, certainly something to keep in mind. Crude oil, though, in the midst of these pullbacks, crude oil was kind of leading the market. So if you look, crude oil was falling, started in June of last year, and then at the cusp, the lows here, we started to bounce. So if you look, crude oil was really showing the cracks in the stock market again. Look, we hit our highs in November. We recovered up to the 2100 level on S&P 500 futures, and crude oil started to roll over again. And guess what happened at the start of the year? The market started to roll over. So you want to take an S&P 500 chart, put it on top of this crude oil futures chart. Crude oil starts to melt lower, and then the market comes down with it. We're seeing the opposite here, off the lows in February. Crude oil has yet to pull back, and you can see actually hit our highs recently. Crude oil is just a little bit in the red this morning, but if we start to see crude oil pull back into the summer, as the last couple of years, if you look, the crude oil crash actually started in June of 2014. So if you can go back June 2014, that's when everybody thought crude oil was going to go to 160. Did the exact opposite, actually came down to 60. And again, last year, crude oil started to roll over in the summer months, started in June, pulled back, and of course in August, that's when S&P 500 futures crashed. So keep an eye on crude oil. Crude oil does matter. The U.S. dollar index as well. U.S. dollar index seeing a little bit of a bounce after it came down under 93. You can see the bounce we're having is just more of a downtrend. We're at support, flagging a bull flag, and a move up to levels that we haven't seen since the internet bubble popped. Distinct possibility, and I think that's the more likely scenario. Especially, hey, we get CPI, we get inflation coming in a little bit. It's going to raise expectations, strengthen the U.S. dollar, and we're going to see a move back into triple digits for the U.S. dollar index. Couple charts to watch. Let's look at the NASDAQ, and if you're a bear in this market, the NASDAQ is what you want to look at. Still some sort of a head and shoulders topping pattern. You could also look at the small caps, the trend, and if you draw a trend line across, we're back under this trend line resistance. So this level here, I mean, you look at it, we got support here, we got a trend line resistance here, coming together at about 110 here for IW. I'm going to break under that, and I think we're setting up for a move back to 100. S&P 500 ETF, the spiders, here we go, right up here. The rubber meets the road, and I talked about it this morning. We're on the cusp here of a possible breakout to new all-time record highs. If that doesn't happen in the short term, I think we're going to come back. And as I've been talking about it, S&P 500, we've retested this line more and more frequently. And we're setting up possibly for a move back down. UPBOptionMillionaires.com. So we have S&P 500 futures pulling back. How about Home Depot real quick? Reported earnings this morning. Painted a new all-time record high, 140. And pulling back a little bit, just about flat. I joked about it, really. The option premium sucker is on sale at Home Depot because that's what's going to happen when the opening bell rings. I have some 131 puts. So we got a lot of room to the downside before those start to become profitable right now if the bell were to ring, sitting on a loss. But we'll see. Hey, you know what? It's still Tuesday. Got a lot of time. If you look at a stock like Disney, we traded for earnings last week. Got the 105 puts. Yeah, we traded under 100. And I talked about Disney after its previous earning reports that the move it had post-earnings took a couple weeks to really come to fruition. So if you look, Disney reported its earnings, it declined from record highs and continued lower. So if you look here, this earnings report decline. I think we're going to continue down to about 96. That's going to be strong support for Disney. All right, UPBOptionMillionaires.com. I'll see you in the chat room. Some weakness in the market. Go, get out of here. Goodbye.